Hello, 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 hello. Can you guys hear me? Hello, hello, hello. Can I not freaking... Can you guys hear me? Hello, hello. Audio, hello. Hello, hello. You can hear me? Can you guys hear me? Please tell me you can hear me. Okay, I'm saying yes. Yes, it's back. Please, I need everyone to confirm. Can you guys hear me? Okay, cool. That's good. That's good. At least everyone can hear me. All right, perfect. Cool. Let me... Yes, John. All right, perfect. Cool. Finally. Great. So everyone can hear me. Thank you for joining. The reason I've done this stream so early is, one, it's convenient for me because I'm going to be busy today. Two, whoever is serious about trading and they have to wake up really early on their weekend to join a stream to learn, if you're here and you had to wake up early for it, then it shows me you're serious. So thank you for being here, and you will not regret it. I'm here to answer everyone's questions, so have at it, basically. I've put on slow mode so I don't get spamming, because I know you idiots spam a lot. And then two, I've only allowed subscribers to comment so that I get subscribers. So yeah. All right, so keep people are here. We got 27 people, 32 now. Okay, not bad. Let me start sharing my screen and let me break down German 40 for you for the trade I took on Thursday. It was really clean. I think this will be beneficial for you guys. So let me share my screen. One sec. All right. Good morning. Good morning. Let me move this up there. Okay. So we have German 40 over here. Okay. Now, this was the trade that passed me my 300K funding pips account. Now, wake up early, bro. I'm not yet bro, I'm yet to sleep. Oh, flip. Okay. Well, I mean, you stayed up at least. Yes, this person. Yes, bro, we can. Perfect. So everyone can hear me. Everyone can see me. Cool. This is a trade that passed my 300K funding pips account. Now, let me teach you guys something. Okay. Maybe you already know this, but my strategy is simply retracement and follow the trend. So this is the retracement. We can see we're pushing up. Just let price retrace and then just continue. That's what I do. Now, how do I do that? And quite accurately as well. So the reason I trade German 40 is because between 7 a.m. UK time, so right now, and 9 a.m. UK time, within that 2-hour window, you'll probably get a trade. If not, then I don't trade really. So I kind of wait for that time window. So it makes it very easy for me. I just wake up, take a trade, and I'm just done for the day. And it just moves very, very clean. I mean, look at this. Big impulse, correction, impulse, correction, impulse. Like, it's so nice. So you just need to be following the trend, really, on the lower time frames, higher time frame, whatever. It's just, you're just following where it's already going. You let price do its thing first. You let it retrace, then you continue on the trend. You're not trying to predict complete reversals or anything. You're just continuing where price is already showing you that it wants to go. how many people we got? We still got 32. That's probably going to update. 33 now. Cool. So in this scenario here, can you guys see my screen, by the way, the trading view screen? I just need to confirm because I don't want to start talking for no reason. So can you guys confirm if you can see my trading view screen? Yes, perfect. Calm. All right, cool. That's good. Let me just send the live link to everyone again. New live session link. Join. Because I think a lot of people just got confused because I had to end the stream to change my microphone input. So sorry about that. Before I get completely started, let me just make it very obvious that this is the new link. What time frame? Okay. Let me quickly answer these. What determines your targets, Daddy Kira? Okay, so my targets. Now, in this scenario, I was just trying to pass my funding pips phase 2 account. So where my TP was, let me just see the candle because I remember what the candle looked like. It was, yeah, we had these 3 bearish ones and I passed. So actually it was like there. That was it. So how I determine my targets. So within this situation right now, the minimum first target for me is this Asian high. So minimum target for me anytime, if I'm trading in the Asian range, then my first target is always the Asian high or low. And if I'm trading outside of the Asian range, for example, if we sweep the Asian highs and then I'm looking to sell, I just target the Asian lows minimum. That's my minimum targets. And it's like probability wise, most likely those will get hit. Anything after is going to just be adding more risk in terms of it might reverse or whatever. But minimum, my targets are always at least Asian highs, Asian lows. So that's my initial targets. And then later on, like further targets would be things like fair value gaps. So for example, in this situation right here, when I'm buying over here, I would look at any untested fair value gaps in all of this area. Okay, so I'm trying to buy to an untested fair value gap. Now, the first fair value gap that I can see is right here on the 15-minute time frame. So that's kind of where I'd look to try and get out. On the 30-minute as well, you got one right here. Was there one on the hourly? No, that's been tapped into. 5-minute, let's see. Yeah, so it's tiny one right here. That would be your second target. After the Asian range, that would be like an extended target. After the Asian range, you'd look at previous highs and lows. So for example, this high right here, this high here. So you're just looking at previous highs, and these act as liquidity. So you kind of expect these to be swept. If we're coming close to it, most likely that high, these previous highs will get swept. So that's why that's kind of how I base my targets off. And the next question was, what time frame do you start looking at for your daily bias? And yes, trading views as well. All right, yeah. So what for my daily bias? So the thing is, for the whole day, should I buy now? Yeah, you should definitely buy now because market's open. How I get my daily bias now for German 40, I don't really look at the overall like long-term target or whatever. What I'm looking at for one is what the Asian range does and what I'm expecting London session to get to do. Now, I was not expecting price to come all the way down like this again, then back up. I wasn't expecting any of this. All I was focused on was we've been quite impulsive in Asian range. We're slowly coming down. We're retracing down into a 5-minute fair value gap. I might look to buy. Now, that's all I'm looking at. Pre-London, I just want to buy, get the impulse, and then get out. And now, if price had mitigated all of these order blocks down here, all of these fair value gaps down here, then I maybe would have held it much longer for extended targets and maybe expected price to be bullish. But I'll get onto that right now. So I'll get onto that. Don't worry. I'm going to explain why you wouldn't hold this trade. I'm going to explain that. So in this trade, why did I even take this trade? Let me talk to you about that. So we had a 5-minute fair value gap within the Asian range. We had a retracement down just before pre-London open, and just after pre-London starts at 7 a.m. what we can see is this 5-minute fair value gap here drop to the 1-minute time frame. And look at this price action right here. It's very, very crucial to understand this, right? Just looking at it, it's so clean. Price at 7 a.m. This is it. If price comes into it before 7 a.m., I don't really look at it. But 7 a.m., price pushed down, tapping the 5-minute fair value gap, pushed up. There's no actual entry for me right now, even if we have broken these highs with this big wick, because there's no fair value gap for me to enter on, right? I'm already on the 1 minute, so there's no fair value gaps. Then price pushes down further, sweeping this wick low. Okay, so we're grabbing more liquidity. And then right after sweeping the low and grabbing liquidity, we push up quite impulsively, creating, let me just get rid of this crap, creating this 1-minute fair value gap right here. Is that clear? We pushed down, pushed up, no fair value gap, pushed down further, then pushed up, breaking the previous wick high, closing above it, and then now we also have a 1-minute fair value gap right here. Let's get rid of the bottom one. So now we have a 1-minute fair value gap right here. That's where I took my buy, right there at the start of the fair value gap, and my stop loss was below the wick low over here. That's it. And then my first target was Asian range high, but because I was on my phase 2 for my funding pips 300k account, I was just trying to pass. So wherever that TP was to make me pass, that's what I did. So I risked 2% on this trade. I normally risk more, but I didn't really have to have my stop loss all the way down here, because it structurally, if price breaks this low, it's probably going to keep going down further. So there's no reason for me to even have a wide stop loss. I know that's a good safe stop loss because we've shifted structure to the upside and the protected low is over here. So I took my buy from that 1-minute fair value gap after getting a 1-minute market structure shift, after tapping into the 5-minute fair value gap, which was sitting right here. So these are all the confluences that I'm looking at in one trade. We've tapped a higher time frame fair value gap. I know 5-minute isn't like higher time frame, but it's higher than 1 minute. So it's like we have some area of interest over here. Let me see. Was it even a 15-minute? Okay, look, even then, 15-minute, we have this big fair value gap. I just refined it down to the 5-minute down here. You see what I mean? It's like, yeah, sure, 5-minute isn't higher time frame, but overall this area, like a 15-minute time fair value gap, I've just refined it down to a 5-minute. You can even refine it down to maybe a 3-minute as well. Yeah, look at this. You can refine it down to even a 3-minute fair value gap right there. So it's the same thing. It doesn't really matter. It's just that overall it is within a 15-minute fair value gap, then a 5-minute, 3-minute. Like, you can just refine it down, but overall it's within a higher time frame fair value gap. When you see like big bullish candles like this, clearly it's an area of interest. So yeah, price taps into the higher time frame fair value gap first, then gives me a market structure shift to the opposing side. But look at this. I'm not changing the trend or anything like that, right? Because market structure is shifting, sure, but I'm not trying to go against the trend. The trend is overall bullish. You can see we're pushing up impulsively, stopping for a bit, pushing up impulsively, correcting down a bit, then pushing up impulsively again. I'm just following the trend. Higher highs, higher lows, higher highs, higher lows. So I'm not doing a trend reversal. I'm doing a trend continuation, but my entry is a trend reversal on the lower time frames, because on this 1-minute time frame, look, we're making lower lows and lower highs. We're coming down slowly, breaking lows. So we're bearish on the lower time frames, but over on the higher time frame, we're bullish. You get what I mean? So once price taps into my higher time frame fair value gap, then we get a market structure shift to the upside. We get a 1-minute fair value gap, and that's when I take my entry. And this is after 7 o'clock open, 7 a.m. open, so pre-London session. So that's the only time I trade German 40, between pre-London session, 7 a.m. and 9 a.m. UK time. And that's it. You just take the buy and you just continue the trend. So that's what the trade was. I hope that makes sense. It's a very, very simple model. I really, really believe you guys should start implementing this, looking at German 40. Just follow the highs and lows and follow fair value gaps. Flip and you make so much money. Okay, we've got 47 people. Not bad, not bad. Should I buy? Yeah, I'm just trolling. How are you? I'm good, man. Hi, Zamco. Can you please do a video on the settings you use for your fibs? Indicators, mainly just the correct settings for the tool being used. Really appreciate. Cool. So my fibs is very simple because this is all that's important, right? This is my fib. That's it. Just 0, 100, and 50. So for settings, look, it's just 0, 0.5, and 1. And down here, the levels are in percents, so it's not like values or whatever. And then the text is in the center, and that's it. And these are my colors, just the standard blue and just black and black. So that's it. That's my fib settings. And my Asian range settings, which everyone always asks for. If you're using the UTC +1 time zone, which my camera's blocking it, but it's like down here on the bottom right. Like you see right here, you can select your time zone. I'm using this London time zone right here, UTC +1. And if you're using that time zone, then your Asian range by Nico 948, it should be these numbers right here, 20 o'clock and 2 a.m. So that's, what's that? 8 a.m. Sorry, 8 p.m. and 2 a.m. Whatever this time zone is within this indicator, I just put 20 and 02. So 20 and 2 a.m. And within my London time zone, this will mark out the Asian range between 1 a.m. UK time and 7 a.m. UK time. Between that time is Asian range. So that's what it marks out for you. So it's just very helpful for me. So yeah, that's my Asian range and fib settings. And if you want my candle colors, it's literally, look, it's all just black, 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 except for the one of the bodies that's bullish. And that pink is just this basic pink. So that's my colors. Okay. Bro, what is your opinion on German 40? So German 30, German 40 DAX, whatever, it's all the same thing. Look at this. People ask me, what's your overall bias on German 40? It doesn't really matter because I'm just waiting for Asian range to do its thing, and then I take my trade. So I can't analyze German 40 right now because, for one, market hasn't opened. Two, Asian range hasn't opened. Asian range hasn't done its thing. I only go off what Asian range does and what London Open does. That's all I'm waiting for. I'm not going to be predicting from before the day even starts, like where I'm expecting price to go. Sure, I can do that and have some sort of expectation, but that's not really how I go about German 40 specifically. I just wait for price to do its thing in Asian session, and if I don't get an entry in London, pre-London, I just wait for London Open to do something, and then I base my entry off that. So if I was to break down German 40 in terms of long-term like direction or whatever, I would be following the bears. We have been quite bearish recently for 1, 2, 3, 4. So we had 4 bearish daily candles. So the whole of this week was bearish except for one day, which was like doji basically, so indecisive. But overall, we are trending downwards. And now what I do to find out like the area I'm looking to target is look at higher time frame fair value gaps. So overall, we're pushing down, making lower lows, lower highs, lower lows, lower highs, lower lows. So now you're probably expecting price to be bearish for a while, for the next like day or whatever. So where do you expect price to go down to? Am I going to expect price to reject off this area and just start pushing up? No, because there's a lot of consolidation here. But what's sitting below that's untested? A 4-hour fair value gap. I'm not saying price will come here and then we start buying off and like that's where price is going to reject. No, I just use this as a target. I'm expecting price to be pulled down at least to this area down here. Doesn't mean I'm going to be buying from there, but it keeps my bias like very clear that I want to keep selling at least till this area, because maybe from here we can reject up and continue up, or we might actually start breaking this area and continue even further down. But at least minimum, I'd expect this 4-hour fair value gap to be tested. So that's what I'd be targeting. Now let's drop timeframes to see if there's some sort of untested fair value gap within this area. So that's what I do, right? I'm just looking at different timeframes to look at areas where price has not been tapped into, or where price could potentially reject from. So look, on the 30-minute, all of this area here, every single fair value gap has been tested. This 30-minute over here, guess what? We've been tapped into right here and right there. All of this, there's like no fair value gaps except for here. That's been tested. We had one fair value gap right here, which has been broken. You can see we broke below it, and then now we've broken below it now. So all of this is nonsense. I don't expect price to reject from any of here, but we do have an untested 4-hour fair value gap down here, and also like a 30-minute right there. So that's it. That's my bias for German 40. I'm just expecting price to at least come down to here. Now, how it gets down to there is completely dependent on Asian session. How Asian session opens up, we might wick up first and then start coming down, whatever. Irrelevant to me. But in terms of targeting and bias, it's bearish until this 4-hour fair value gap. So that's how I go about breaking down like my direction and bias, just overall. But in terms of actually taking a trade, I just wait for German 40 to do its thing in London session or in Asian session, and then go off that. So like when I spoke about the buys that I took, it's just I use what the Asian session did, and then I take my trade based off wherever we're retracing into. So I hope that answers your question. Or what's my opinion? Yes, my opinion on German 40 is bearish. No trade after 9 a.m. or can I wait till 10 a.m.? You can take a trade after 9 a.m. It just becomes more riskier the longer you wait, because why haven't you got your trade? Why hasn't there been volume between 7 a.m., which is Frankfurt session, by the way? And guess what? This is a German indice. So a German indice, if that's not getting volume in Frankfurt session, which is Germany, then that already poses a question. Like, there's no volume in Frankfurt. You're not really getting a trade. Okay, that might be a bit risky. And then if London opens, and again, that's European stocks, right? So London has opened up, and the European indice, German 40, is still not giving you a trade, even in London open. That's where you're expecting your volume. So now if it's now 10 a.m., 2 hours after London open, are you likely to get a very high probability trade? Like, no, the volume's going to be dying down because we're coming up to now pre-New York. So that's why I kind of like leave it between 7 a.m. and 9 a.m. Within the first hour of London session, at least, you should get a trade. If not, then you're just adding more risk, and there's just not enough volume in the market. If it's not giving you an opportunity within 2 hours of Frankfurt session and London open, then the indice is probably going to be a bit whack for the day. So that's why I kind of stay away. Sure, it can work, but it just makes it a bit riskier. So I lost 70k worth of challenges over 3 years. This year I made 80k from prop firms. Very nice. But the last 2 months I've lost all funding and lost all of the challenges. What advice do you have? Well, I'm in the same boat. I lost all of my funding in August and July and August. But now I've got like 500k funding or something. I'll tell you guys about the FTMO a bit later. But yeah, the advice would be to just continue. Really, that's all I did. I just stuck to my strategy, and I just bought more accounts and just passed them, just following my strategy. When the market conditions are better, then obviously you're just going to be passing your accounts more, and then you can hit more payouts. So yeah, I lost all of my funding as well, but I didn't change my strategy. I know my strategy, but I just spoke about, like taking the buys that I took on German 40. Textbook setup, I just wait for that. If it doesn't work, then it doesn't work. If it works, then great. I'll keep taking it again and again. You just have to keep on going until the markets are in your favor, and then you'll see the results. Understand you use the sweeps of Asian high and low to determine your bias. No, that's not typically true, because even if we sweep the Asian high, I might still be bullish and just expect price to keep continuing high. It's about how we get up to breaking that high, which I'll speak about. May I ask, what will your bias be if both Asian high and lows have been swept before London Open? That's very rare, by the way. Now, if Asian highs and lows are swept both before London Open, what I would do is follow market structure, right? Now, it depends. Did we sweep Asian highs first and then sweep Asian lows? So let's say pre-London, we sweep the Asian highs and then we sweep the Asian lows. Now, just before, let's get rid of all this. Don't look at this, by the way. I'm just oops. Here's the thing. I'm just gonna get rid of all the candles here, just so I can get the Asian range as drawing. Let's say we sweep Asian highs first, and then we sweep Asian lows. Now, assuming this is pre-London, before London, this is already giving you the information you want, right? Now, based off purely market structure, what would you think? We've swept Asian highs, we've swept Asian lows. Okay, following market structure, we've swept the highs, manipulated, and now we've broken the lows. So if we're breaking lows after sweeping a high, that's going to be showing you that most likely we're just going to continue further down, because technically we've broken a low, so you'd expect a retracement to then make another low. So if pre-London we swept the Asian highs and low, I'd just expect price to come up to some sort of fair value gap here in a premium area. So you would mark up from your high to your low, and you'd have some sort of fair value gap in your premium area. And I'd expect London session to push up into that area and just continue further down. So that's what I would do if the Asian high and Asian low was swept at just before London Open. I'd expect London Open to then push up and then continue down, because pre-London is 1 hour, by the way. So if pre-London we've swept the Asian high and low, that means the hourly candle is going to look like a big wick up and then a big bearish close. So the next hourly candle is probably going to make its top wick and then flip back bullish and continue even further down. So that's how I'd go about this trade if we sweep the high and the low before London Open. I hope that makes sense. Hello, Zamco. Hello, Adioti Demelade. That's a nice name. How do you use fair value gap, breaker block, IFVG, and order block? Well, come on. Ready? You can get the V2 crash course for free. V3 crash course is available, by the way. I know it's expensive, but there's a reason for that, because it's worth a lot. So fair value gaps. First, you need to know how to mark out a fair value gap. It's an area between 3 candles where the wicks don't meet. So in this scenario right here, we have 1, 2, 3 bullish candles, and between them is this area where you can see, let me zoom in even more. See this wick right here? That one isn't touching this wick up here. Well, that doesn't really have a wick, but point is, it's not touching it. So this is a fair value gap. What you do is you use a fair value gap by waiting for price to break a high or break a low. So for example, we've broken this structure right here. We break this high and we have a fair value gap below. All you do is wait for price to come back to it, and then you just buy, expecting price to then just continue up further to make another high. That's it. That's how you use fair value gaps. Now, order blocks, I don't really use anymore. Breaker blocks, I don't use. IFVG, I do use it, but very rarely for NASDAQ in NYSE Open. It's not common, but I do use it. It's simply, once price closes above a fair value gap, inversing it. So let's say you're expecting price to continue up, right? So we're tapping into this bullish fair value gap. We're tapping into it. You don't know if you want to buy right now, but you need some sort of confirmation. Okay. What you do is you wait for a bearish fair value gap to be inversed. So you can mark out your bearish fair value gap. Let's say, for example, we have one here. Yeah, this is a bearish fair value gap. Price then, instead of touching this 1 minute fair value gap and continuing further down, you see this 1 minute candle closes above. Now, typically when that happens, it inverses it. And typically with the inverse fair value gap strategy, you just buy straight away with your stop loss below the wick low of the candle that closed above, or you can have below the swing low. And then that's it. You take your buy, expecting price to continue up further. That's how you use inverse fair value gaps. I don't really use them much, but that's just how you use it. Okay. Discipline and psychology tips, please. That's the one thing I can't give you tips on. The one tip I would give you is discipline and psychology all comes down to you as a person. I can't teach you to be disciplined. I can't teach you that you should go to the gym 5 days a week. You should wake up at 7 a.m. or whatever and go to the gym 5 days a week. I can tell you that, but are you disciplined enough to actually stick to it and do it? I can't teach you to do that. I can't be there to wake you up and be like, no, go gym right now. You have to just do that yourself, innit? You have to just force yourself to do it. So that's the only thing with discipline. You can't teach someone discipline. So what about NYSE session? Yeah, I don't really trade German 40 and NYSE. It's the same principle, by the way. I'm just following market structure and fair value gaps even in NYSE. It's the same thing. So you determine your bias based off unfilled fair value gaps. Yes and no. Unfilled fair value gaps and previous highs and lows. So for example, let me get rid of all the drawings, right? Let's say on the 1 hour time frame, okay? Let's say there's some sort of fair value gap to the left and we're rejecting it and I'm expecting to buy. Let's just say that I'm buying from here, cool. And there is reason to buy. Now, in terms of my bias and target, we don't have a single one out. Like you see, all of these fair value gaps have been tapped into, except for this one. But let's assume even that's been tapped into. I would be placing my stop TP at like just previous major highs, so swing highs. So like this Asian high up here that's untested, that could be a target. Asian high over here as well. These Asian highs haven't been swept, so I can actually use them as targets as well. So it's a previous swing high and it's an Asian high that hasn't been swept. Those are also targets that I use, as well as untested fair value gaps. Which indices have connection with German 40 like SMT? I don't use SMT. I got no clue, so can't help it that. What happened to your 400k FTMO? I don't know if I want to say. Actually, there's only 51 people here. I'll flip and tell you guys, okay? I'm still going back and forth with FTMO, but basically they've banned me, like permanently. So FTMO's banned me. It's stupid. They were basically saying that I exceeded 2% risk on one of the trades, even though I took a buy on NASDAQ, I took a loss. Then I took a sell on NASDAQ, I took a loss. And then I took another buy on NASDAQ, and then that was another loss. So those two buys were 1% risk each, and I lost both of them. But in between, there was a sell. Now, their rule for me is that I can't risk more than 1% per trade idea. Now, if I'm buying and then I'm selling and then I'm buying, the two buys are different trade ideas technically, because clearly my bias changed to bearish. So they still classed it as same trade idea. But that's so stupid. It doesn't make sense because my bias changed. And now if I've got another confirmation to buy, now my bias changed again. So it's a bit stupid. It's like I took a sell because I was bearish, but then now I'm bullish. So now it doesn't make sense. So they classed it as another violation of their 1% risk rule because I've been restricted for so long. And this is my fourth time breaching the 1% risk rule. But again, why does that matter to them? Like, I'll redo the challenge if you want me to. Why does that mean you ban me? Stupid. So they've banned me permanently. I'm still emailing back and forth. They're replying because I'm trying to fight the case. Like, what the flip? Like, it's a different trade idea because I'm selling. Like, it makes no sense. So for now, I'm technically banned by FTMO forever. Don't worry, I'm thinking of a way to work around it, which is probably not legal, but yeah. we'll see. We'll see what happens. But that's what's happening with my 400k FTMO. I passed it, but they're banning me permanently. So yeah. Zamka, why do you not use less risk, like 0.5%, to avoid losing the accounts? Well, once I'm funded, I only risk 0.5 to 1% anyways. When I'm trying to pass the challenge, then I'm gonna risk a very, very high amount. Because look at this, right? Look at this. The buy that I took on German 40, let me explain this to you. The buy that I took on German 40 with this 1 minute market structure shift and this 1 minute fair value gap right here, I took a buy. Now let's say I had to make 5%, right? My phase 2 is 5%. Let's say even if I'm risking 1%, I need a 1 to 5, okay? Now what you've just said is why don't you risk 0.5% to not lose the accounts? If I had risked 0.5% and I need a 5% target, I need a 1 to 10 risk to reward. Now, where's the 1 to 10? Up here. So when I have a good confirmation on my trade, I have a good setup, I take the trade and it doesn't pass my account. Now you can say, well, you can close your trade and then take another one. Taking another trade is just increasing my risk. Because what if I lose that trade? What if the one after that loses? If I have a winning trade and I have a good setup, I'm going to risk more. So I only needed a 1 to 4, or actually even less, because I think I even got out a bit earlier. It was like a 1 to 3 point something. It was something like that, right? So I only needed like a 1 to 3 point something to pass. But with your idea of 1 to 10, I wouldn't have passed in one trade. I would have needed price to go all the way up to here or something. So that's why I do it, because I can have my targets very low. I just need a winning trade in my direction, and I don't need price to move that much in my direction, and I pass very quickly. But also, if I had a 1 to 10, let's say I close my trade over here and I'm up 2.5%. I have to now take another trade. Now, what that means is maybe I have to wait another day or another 2 days to wait for a good setup. You're just adding days to your challenge. You're just taking longer to pass. That means you have less time being funded, less time potentially making money. So wasting time in challenge phases is just wasting money for me. I'd rather lose accounts and quickly buy another one and try to pass that within the same day than waste time in the challenge phases, taking very, very low risk trades and trying to pass slowly. So that's why I risk very heavy, because I'm not here to waste time. I'm trying to get funded as quick as possible and make money as quick as possible. Because no risk, no Rari. Exactly. What other pair that you trade? Do you trade NY session? I do trade NASDAQ as well, and I do trade New York session as well, but I don't trade New York session that much. I mainly stick to London, but if London's been a bit crap, then maybe I'll trade NY. Can you talk about gold? What's with everyone in gold? Gold's been whack, okay? I haven't been able to get a single winning trade on gold. Look at gold, yeah? Look at this. You're telling me that's something you want to trade. Just look at it. Look at the daily time frame on gold, okay? You're telling me this is something you want to trade? I don't know. But based off this, if we just use basic support and resistance, we can see we've got a daily closure above support, resistance. So you can expect price to maybe just breaking up, at least continuing up to the all-time highs. So that's kind of what I would be expecting on gold. But again, it's like we are just constantly tapping just these highs or whatever. That's weird. The candles have changed, because that's not where the highs were. We were above that. Look, when I go to the daily, oh, yeah, that's weird. Because look, on the daily time frame, we're actually above these highs, but when I change to the hourly, we're below these highs. That's weird. I don't know what's going on there, but yeah, just looking at price action, it's just consolidating. It's really very difficult to trade. Sure, you can just follow these smaller like highs and lows, but I don't know. I don't see anything on gold. The only good trade that I would see right here following the trend was we pushed up from here, and then we had this 1 hour fair value gap. Ooh, wait a minute. No, there's a tapping. Probably a 30-minute. Let me see. Yeah. Okay. So we had a 30-minute down here. So textbook, but again, look, we consolidated so much at these lows. I would have expected these lows to be swept first, but we didn't. But in terms of market structure, yeah, we've higher high, higher low, higher high, higher low, 30-minute fair value gap. That's where you're expecting the new higher low to be made. And you just take your buy and then continue up. But right now, I don't see anything on gold in terms of entry wise. So I'm just kind of avoiding it. And just the price action has been horrendous. What do you think about risking 0.5% or 1%? Pros and cons, and why do you risk at least 2%? Well, I think I've just answered it already. I just need to pass quickly. When you get funded, then definitely drop your risk to 0.5 or 1%. Absolutely. I don't care about that. Definitely drop your risk, because once you're funded, you want to keep that account. No problem with that at all. Do you use a 4-hour fair value gap or 1 hour fair value gap or 30-minute fair value gap to look for a reversal? So my reversal, which is my entry model to continue the direction, but on the 1 minute time frame, that's where I'm looking at my 1 minute market structure shift or 3 minute market structure shift to look for a reversal. I already spoke about gold. How to make whether a sweep of liquidity sweep or market continuation. That was it. Yeah, let me talk to you about that. So basically, you need to understand premium and discount pricing, okay? The reason I say that is because I'm going to show you a good example. I'm going to try to find it. Let's see. This is a good one. This is a very, very good one. Okay. Look at this, right? Understand premium and discount pricing. This isn't a great setup, by the way. It works out a lot, but just for the sake of this video, just pretend, okay? So we have a break of structure to the downside, okay? So that's a market structure shift, right? Price retraces up and then continues further down, breaking this low, okay? Now, when price moved up over here, sweeping this high, why is it not a market structure shift to then take a buy from, let's say, this 1 minute fair value gap, expecting price to continue up? Why is it not? Because we've broken this high, we pushed down, made this low, so now this is our previous high. We broke past it. Why are we not buying? Well, because if you look to the left, we have a 1 minute fair value gap that this one didn't tap into. So we had price retrace and then continue down, but it didn't. We still have an untested fair value gap just above it. So typically, if we break that previous high that didn't tap into the fair value gap, that I wouldn't really take a buy, because we're still within the 1 minute fair value gap, you know? So that's kind of where it's not a market continuation, but it's more of a liquidity sweep. Because a liquidity sweep is where price usually doesn't come up into a fair value gap and then continues further down. So the next time price comes up to that high and breaks it, so we broke this high, that's not a market structure shift. We're not breaking structure to the upside. It's actually a liquidity sweep, because we have the untested fair value gap to the left. Now, if we didn't have this 1 minute fair value gap, or on any time frame, if we didn't have any fair value gaps here, then maybe if we broke above this and this, I'd maybe take the buy. But because we did have a fair value gap, I consider this a liquidity sweep. And now another way to expect liquidity sweeps is, let's say, from this high to this low. Okay, so from this high to this low, I understand price retrace into a premium, okay? But just imagine, because this happens a lot, backtest it, you'll see. If you have an untested fair value gap, that's one confluence that we haven't tapped into. So that's one confluence. And two, if price retrace, let's say over here, so as we push down, we retrace a bit and then we continue further down. If we didn't retrace more than 50% of the move down, so we retraced just a tiny bit and continued further, then if we have a fair value gap and it's in a premium area, because price hasn't retraced up into this area. Let's say we just retraced here and continued down. Let me actually make it easier visually. Yeah, there we go. So let's say price did this. We retraced up and then continued down. Okay? You would expect price that if price breaks this high, you would think, let's buy, because we've broken this high, we closed above it, we're retracing, got fair value gap here, let's take a buy. But the thing is, sorry, if this came up to like here, right? You would think, let's buy, but the issue with that is price, for one, didn't retrace into 50%. So we haven't retraced into a premium and we've started continuing down. That's issue one. Two, we also have an untested fair value gap above in a premium. So that's two. That's two confluences that will tell you that this high that's made, that push down, is probably a liquidity high, and you're going to expect price to sweep it and then actually continue down. Okay, that's how you catch inducements, right? You've probably heard this word before, where it's like a high that gets swept and then we continue further down. So it's not really breaking market structure to continue up, rather we're just sweeping it to actually continue further down. So it's a fake break of structure to the upside and then we continue down. Hopefully that makes sense. You just have to understand premium and discount pricing and fair value gaps and how the high was made and how it's coming up to it. Hopefully that answers your question for how do you catch a liquidity grab or a market continuation. So yeah, that's that. Okay, some fair value gaps, like in a premium zone in a bearish trend, when tapped into that fair value gap and give confirmation, like reverse and then again break down the fair value gap and hit stop loss. How to avoid from this situation? What? So bearish trend, taps into fair value gaps, gives confirmation, reverses and then breaks down fair value gap and hit stop loss. How to avoid? And then price will still just take out your stop loss. For example, we might, in this scenario, let's say, we might have a bearish fair value gap. We've tapped a high time frame fair value gap. We've retraced up into here. We've got confirmation to the downside. We're taking our sales, and then price could still do some stupid crap like this, right? So you could take your sell right here, stop loss above. You've got your confirmation. You're taking your sales down to the Asian lows or whatever. It might tap you in. We've got confirmation, and then price just continues up and just takes you out. It just happens. That's what you need to understand. You can't avoid losses in trading, because if you were trying to avoid losses in trading and you knew exactly how to avoid losses, you would have 100% win rate, right? But no, you can get all your confirmations and price can still hit your stop loss, and that's fine. We're just acting off probability. I know that this setup right here, if we got this type of confirmation, right, we came up into a premium and we started getting a confirmation to be selling and we had untested fair value gaps below, I'd expect price to come down. I have all my confirmations. It meets all my criteria and it can still lose. But I know that at least 80% or 70% of the time, if I take this setup again, 70 to 80% of the time, it will work out. So yes, there will be the trades that lose. That's absolutely fine. It doesn't matter, because I know most of the time this exact setup will work out more often than it will lose. So you can't avoid losses even if you have all of your confirmations. It's just part of the game. You just accept the loss and you just take the next trade. Because if I see the setup again, even if I've lost it, if I see that setup again the next day, I'll still take it because it follows my criteria. It follows the probability in terms of it'll probably win most of the time. So I'm still going to take it. So it's kind of impossible to say how do you just avoid losses even if you got all your confirmations. Well, you can't. Like it's just part of the game. Okay, are your entries in the middle of fair value gaps or order blocks? Okay, we're getting a lot of comments which I haven't caught up to, so I'm going to go through these comments very quickly. Okay, I'm sorry if it's going to be very brief, but I'm just going to have to get through these questions. Okay, I don't want to leave you guys not having your questions answered, but they might not be in depth. Okay, are your entries always in the middle of fair value gaps or on order blocks after the fair value gaps? They are at the start of the fair value gap. So for example, in this situation, we have a 1 minute fair value gap here. My entry would be at the start of the fair value gap right here, and my stop loss would be above. Now we do have an order block right here, okay? But my entry is not going to be here because sometimes price will come into the 1 minute fair value gap here and then continue down. I don't want to miss the trade, so I will just have it at the start of the fair value gap, not in the middle of it, at the start of it. Cool. What's your expectation of price action coming out of August into September and with the new fiscal quarter starting soon? Yeah, I expect September, October, and November to be really good. And half of December, the first half of December is all right. But then after like the 15th of December, like the second half of December, just stop trading until like the first half of January. So from December 15th to January 15th, kind of just stay away. There's going to be like no volume in the markets. Sure, you might see your setup randomly on one day, but just stay away. Really, it's just not worth it. So I think it would be a great Q4. Hello. Wanna get where the point that you said you were saying, yeah, that's the moment I'm gonna enter now. It's after the confirmation, right? So over here, when I took the buys, the reason that made me think I'm going to buy now is we had our fair value gap here, 5 minute fair value gap there, you remember? Once we tap it, I'm not looking to buy. I'm not thinking I'm going to buy now. Once we pushed up, closed above this high, breaking structure to the upside, and then we had this next candle. I needed this next candle because I needed a fair value gap down here, right? Once we created this fair value gap and this candle closed and we created the fair value gap, that's it. I was thinking I'm going to buy here and now. That's it. The moment we had the market structure shift after tapping a high time frame fair value gap and we created a 1 minute fair value gap on the lower time frames after a market structure shift, that's it. That's my instant I'm ready, I'm going to buy. So hopefully that answers your question. Nasdaq, please, later. Tell him for SMT with German, it's the stock known as EU50. EU50. I don't look at SMT. I don't care. So why am I going to look at it? Sir, do you have a personal account? Yes, but I've withdrawn everything right now. I don't really like to trade personal capital. Hey, Zamko, I'm messing up with my profitable trades, not letting them run till the profit. How do you approach after getting into the trade till the take profit? Well, for one, it depends where your take profits are. If your take profits are incorrect, you're going to keep missing your take profits, so it's not going to work out. How you determine your take profits? First of all, you have to get your entry and bias correct. So you have to follow your higher highs and higher lows. You have to follow market structure, but you also have to, wait, where is this? Yeah. You have to look at potential barriers, right? Let's say you are in a buy from down here, okay? Very, very valid buy because we've broken this high over here. We've retraced, now we're taking another buy. You have to look at any barriers along the way. So first barrier is fair value gaps. Look at where price can potentially reject from. So if price is coming up and you're in a buy, just look to the left. Are there any fair value gaps where price could maybe reject from? If there are, then maybe you need to be very cautious when price gets there. And if it starts like reversing or whatever, then you might want to look to get out. Also, another way is if price is following market structure like bullish, higher highs, higher lows, higher highs, higher lows in your buy, the moment you start getting a bearish trend potentially being created where we're breaking structure to the downside and to the left there's some sort of higher time frame fair value gap, then that's kind of your way to think, okay, I should probably get out of this trade. Hopefully that helps. So you have to just determine your take profits correctly. So previous highs and lows, fair value gaps, and how price reacts once we sweep those highs, or if we get into those fair value gaps, how price reacts to it. If we're starting to get a reversal on the lower time frames, probably price is going to start going against you, so that's when you should get out. Hi Zamko, could we please have your MT5 chart? Candle colors looks so clean. So it's the same thing, it's just pink and white. It's just pink and white. Look. Just pink and white. Now the thing is, you might be asking me, what pink is it? Okay, fine, I'll have a look. So the bar up. I don't know how to. Oh, here we go. Here we go. So the pink that I use. Okay. So this is the code for the pink that I use on MT5. If you go on the sliders, that's the code. It's ED72CF. That's the color, the hex color that I use. So red 237, green 114, and blue 207. I never knew that before. So thank you for making me look. So that's the pink that I use, okay, for my pink in my chart. And the white is just white, and the background is just black. And that's it. That's my chart colors. Hopefully that helps. Sorry about your FTMO. Just do personal account with brokerages. No, because I'm a flipping retard, Ash, and I can't really stick to my trading rules. So if I have a personal account, I'll just risk the whole account in one trade, and then I'll just lose the whole account, and I got no money after that. But with prop firms, you can blow the account, you can buy another one. It's just less risk. Understand you trade most. I understand you trade mostly with phone, but do you feel limited as you can't see as much of the screen, or it doesn't matter in terms of finding setups and executing on your strategy? What do I need to see on my phone? That's very important, right? I can see all of this on my phone. I can see at pre-London, we're tapping into a 5-minute fair value gap. I'm dropping to the 1-minute time frame. I'm looking at this 1-minute fair value gap. I take my buy. And then on my phone, I just zoom out. Like, okay, we've got Asian highs, very obvious target. Okay, we've got previous high up here. That's it. And that's all I'm looking at. So I'm not really restricted by my phone. I don't need like all of these candles to the left. Like, I'm not caring about any of them. I'm only looking at now within just the previous like day or whatever. So I can see all of these candles on my phone. I don't need to be seeing anything up here. It's irrelevant to me. So that's why I'm not really limited on my phone. I prefer to use my phone. If I'm on my PC looking at trades, I tend to actually take more losses. I just prefer my phone because it's just, I'm just looking at now. I'm not looking at all the crap to the left. Once I'm in the position, then sure, I might start zooming out on my phone and start looking at any sort of areas. But that's trading, but you can just zoom out on your phone. It makes no difference. Okay. We got more questions coming in. Cool. Got 45 viewers. Nice. Thank you everyone for joining, by the way. I know it's early, but again, it's good. It's good. Wake up early, get things done, do the hard things. Okay. What's the next question? Where's the point where you're going to say, yeah, that's the moment I'm going to get in? And what is, I've already said that. And what is going to be the long or short waiting for the market to get closer to the fair value gap, or just S&T? What, like, I got a problem with, because me as, bruv, it's not even English. What the flip? Like I've already said, like once I get my confirmation, 1-minute market structure shift, and there's a 1-minute fair value gap, I just set my limit and stop loss below, and that's it. I just leave it. Do you look at a market structure shift after the fair value gap's been tapped into? So once price taps into my higher time frame fair value gap, so let's say this 5-minute, I'm not just going to buy straight away. I'm going to drop to the 1-minute. Now on the 1-minute, if I get a market structure shift and we have a 1-minute fair value gap, I'm not going to wait for price to tap into that fair value gap and give me some sort of confirmation. No, because now I'm on lower time frames. I'm happy to just take the buy right there, stop loss below, because we've got the confirmation already. So this is the confirmation I'm looking for in the higher time frame fair value gap. So I've got it. I'm not going to then wait for another confirmation. It doesn't make sense. So that's it. Once I've got the confirmation, I just take the buy straight away. Your favorite trading pairs are these 4 right here. Gold has, I flipping hate it right now, but German 40, Nasdaq, gold, and USD JPY. They're my 4 main pairs that I kind of look at. Like you said, 7 a.m. to 9 a.m. for London session. What is the timing for NY session that you trade? So for NY session, I look at between 12 p.m., which is pre-London, pre-NY, and 4 p.m. So between 12 p.m. and 4 p.m. is like my NY/NYSE session. So pre-NY, NY, and NYSE. Between 12 and 4. That's 4-hour window. But typically, I kind of do just look at NYSE So at 2:30 open, and I just look at the first 1 hour, the first 1 to 1.5 hour of NYSE open. And if I don't get a trade in that, that's it, I'm done. That's my cutoff point. So like basically just an hour after NYSE open, that's my cutoff point. So I wanted to ask, why didn't you go for instant funding without evaluation? Because instant funding comes with consistency rules. So if I hit a big winning trade, I have to hit another one and then another one and then another one. I can't do the consistency crap. My strategy is you just keep taking high risk to reward trades. You might get a few losses. The one trade that wins, it wins really big, and that's it. You leave that for payout. You can't do that with instant funded accounts because it comes with consistency. I am so good, but choosing the point that I'm going to risk 1% of my account. I don't know where I am so good at drawing expectations for the OF, but choosing point at this expectation, I'm so bad at it. What should... Bruv. I don't understand the English. I'm sorry. Learn the V3 crash course. Buy it, understand it, and you won't have this fear, right? You get your confirmation, you know the confirmation, you just take the trade. You risk your 1% or whatever. Is that 1% risk per trade on FTMO only for you or everyone? It's only for me. If you're new to FTMO, you can risk whatever you want, but you might get a risk email saying, look, from now on, please only stick to 1% risk. But until you get that email, like that risk email, you're fine to risk like 4% in a trade. But just bear in mind, you'll probably get restricted. I've been restricted for this whole year. Can you explain what is or isn't an MSS? I've been confused often. If you scroll back in this stream, I spoke about it, where you have premium and discount pricing. So if price was to retrace less than 50% and continue down, and then we broke the high and then continue down, okay? So we have a 1 minute fair value gap up here, okay? So this would not be a market structure shift. If price retrace, so we've broken this low already, we've retraced, but we haven't retraced into a premium, which is above 50%, and then we push down. If we then break this high, it's not a market structure shift for me, because we have this 1 minute fair value gap that hasn't been tested, and we haven't retraced into a premium. So that's my telling sign that this push up over here, this is not a market structure shift. It's rather a liquidity grab to continue further down. Hope that answers your question. I'm a beginner and still in the learning stage and trying to pass a 10K challenge. What pair would you recommend to trade to pass my challenge quickly with a good setup? German 40. Have you seen FundedX new elite accounts with no risk fraud apparently? What's your thoughts? I haven't looked at it, but I need to look at FundedX because they're a big company. So I might look into FundedX. I've never looked at them. A bit off topic, but what does Zamco mean? Curious to know about my mentor. Haha. How the name Zamco came about? ZAM are kind of like the first name initials for my friends. So Z is one of my friends, and M, that's actually his surname, but it begins with M, but H just didn't make sense because his name starts with H. So we had Z, A, and M. So I was just like, okay, we can create a company together, like a corporation, and corporation is like co. So ZAM co, Zamco. I'm like, oh, okay, Zamco, that works. And that's how the name came about. Obviously, we didn't create a company together, it's just me, but that's kind of how the name came about. Just combining my two best friends and my name, the initials, like the first letters together, and then co for cooperate. Thank you so much for answering our questions and dropping gems. What would you advise when it comes to prop funds? Which is the best, which to avoid based on experience? Okay. The best prop firm till now, currently, is Funding Pips. Never had an issue with them. And if you do, they resolve it. They're very, very clear on their rules. Very easy rules. like in the challenge phase, I can risk like 4%. They don't care because they say you're allowed to do that. So they don't care. They don't say you're allowed to risk whatever, but we just, be responsible. And then when you do risk too much, then they send you a risk email saying, no, you just risk 1% now. They don't do that. They're very clear. You can risk more than what, you can risk whatever you want. And they mean that. And then in funded stage, you can max risk 3% per trade. That's more than enough. You don't need to be risking 3% on the funded stage. Hell no. I risk 1% max. Sometimes 2, but pretty much less than 1% typically. So funding pips is definitely the one to go with. And the next one, FTMO. Sure, I've been banned by them, but they are still a good prop firm because, they are still good. Funded Next as well. Very good prop firm. Again, but the issue with these, like FTMO and Funded Next, they will restrict you if you risk too much. But if you keep your risk consistent and good, like 1% or less, and you also don't go for big crazy payouts, you'll be absolutely fine. With FTMO, they don't care what your payout size is. Just don't be stupid, like in terms of your risk. So these are the top 3. Then Titan Capital is good as well. As long as you follow the rules, read the rules, follow them, you'll be paid out. The thing people don't understand is with a lot of these newer prop firms, don't go for very big payouts like 20K, 30K. Aim for like less than 5%. Like your payout should be less than 5%, and you'll pretty much be fine. You won't get investigated. You'll be fine. Because look, I talk to all of these prop firm owners. I know them, and they tell me like, if people's payouts are less than 5%, we don't really look into it. Like it doesn't get flagged out. We don't have to investigate. So you can fly under the radar most of the time if you're less than 5% payout. Whatever your account size is, less than 5% payout, you'll be fine most of the time. So yeah. So Titan Capital, Quantecal, yeah, their rules are quite restrictive or whatever, but I've spoken to Alex and he's removing a lot of rules because he understands it's quite restrictive and it's not good. So even now, like they've removed the equity protector crap. So Titan Capital, Quantecal, these are also good. You use code ZAMCO, of course, to get 50% off Quantecal or 30 or 40% off Titan. So yeah, you can do that. One sec, I'm very, very thirsty. I'm going to get a coconut water from my fridge. You guys remember the fridge? Oh, the pink fridge, you remember? Okay. Oh, that's good. Okay. It's 8:12 a.m. We've been going for 1 hour 7. Okay. Right. More questions. Let's go. What entry model do you use? This one right here. Market structure shift. Let me actually mark out that as well, just to make it easier for you. Oops. This is my entry model. Market structure shift to the downside, retracement into a premium area, and a 1 minute or 3 minute fair value gap. That's it. It's just market structure shift, fair value gap, and continue. That's it. That's my entry model. I know you make back all of your losses back with just one profitable trade, but you don't lose your mind after losing back-to-back trades since you're high risk reward with low win rate strategy. My win rate isn't actually bad. The issue is I take a lot of losses because I don't follow my strategy. I take a lot of stupid trades where I haven't got the confirmation and I just take the trade. But if I actually wait for my setups and take the confirmation and then take the trade, it's like 70% of the time I win on German 40. So the strategy is actually really good. I don't lose my mind because I've been doing this for 7 years and I've been making the same mistake for 6 or 7 years. So I've been taking back-to-back losses a lot of the times and then one big win. I've been doing that like my whole trading career. So that's why I don't lose my mind, because I'm just used to it. And I also have like an insane amount of confidence in my strategy because of my payouts that I've had. What's it, like 680,000 in the last year, just over a year, 680,000. Now that doesn't happen by chance, right? I'm clearly doing something right, and that is I take a lot of losses, maybe, but I know that one win is going to make back all of my profit. Make back all of my losses. So I already have the evidence. So that's what gives me my confidence. That's why I don't lose my mind, because I actually trust it. Like, if I had no results, no confidence in my strategy, if I'm taking back-to-back losses, I will go crazy. I'm going to be like, oh, is this next one going to win? I don't know. But I know it works, so it's fine now. Like, I can keep taking the losses. I'm like, all right, fine, yeah, loss. Okay, whatever. Oh, this is a good setup. Let me take this. Okay, loss. This is a good setup. Let me take that. Oh, finally, we win. All right, great, perfect. Like, I know that's most likely going to happen, so it's fine. So that's why I don't really lose my mind. Please, some advice. I'm a break-even trader. Honestly, that's a great place to be. I was always just a losing trader. I was never a break-even trader. So if you're break-even, my advice would be look at the free V2 crash course. It's completely free. It's in the Discord. But if you can't access that, then you can pay for the V3 crash course, which is expensive, I know. It's £500. Well, $499.99 plus $25 fee. That's not my fee, by the way. That's just WAP. They just add on a $25 fee. But trust me, when you understand the way I go about the market, you're a break-even trader. But if you start implementing what I do, it's going to change your life. I'm telling you. That's not me trying to sell you something, because I don't care if you buy it or not. I make enough without my course. I don't need it. But I'm just saying, if you do want to, it's there. But in terms of advice, you're honestly doing great. If you're a break-even trader, that's flipping amazing. I was always just a losing one. Daddy Kira, giveaway when? Well, don't worry about it. Don't worry about it. Giveaways are coming soon. Don't worry. Hi, I hope you're doing great. I'm using... Okay, thank you. In which session you trade USD JPY? Any session. If I see a trade in... No, that's a lie. I do trade Asian session for USD JPY sometimes, but that's stupid of me. I shouldn't do that. But it's pre-London and London session, or NY and NYSE. That's it. I'm using supply and demand. Up Zamco Capital. Sheriff FX. I see you a lot on my videos. Good morning. I'm using supply and demand, but mostly I see price taps into my supply and demand. But in MC5, it does not trigger me in the trade due to broker or prop firms. Okay. So what you need to do is set an alert on your trading view. And once price taps into the zone on your trading view, just manually execute the trade. Or if you're trading with the same prop firm, you will probably start to understand over time the difference between your trading view and your broker on your phone, and the prop firm, on the phone. Also, what you can do is, when you search up a pair, let's say USD JPY, you see there's a bunch of these USD JPYs. They're all the same, but they're all just different brokers. So maybe choose the broker that's closer to the one that you see on your phone. So that's my advice to you. Why does Titan Capital and QT have extremely low payout, like 2 to 3K? Because a lot of people are restricted, right? And that's a lie, because I just got a 4K payout with Titan Capital. So it's not 2 to 3K. But the thing is, they are restricting a lot of people because people are just risking crazy amounts like me and trying to go for big payouts. But then along the way, they just breach the rules, innit? There have been some payouts where I've seen like 12K or 9K, but they're getting there. They're trying to do their best, because you have to understand prop firms, right? When they pay out someone, that is them losing money. They don't want people to all have big payouts, because then that's less money for them and they might just run out of money. They need consistent payouts and they need consistent income. So they need people buying challenges and they need people making just consistent smaller payouts. That way the prop firm business model can work fine. But when you have traders like me, where you have people purchasing accounts, that's money for the prop firm, and then I take out a huge chunk of their money from one payout. That's not great for their business model. So they will restrict, and they might even deny, but usually it's because of a valid reason, right? Because you've breached some sort of rule, because they have very strict rules for that. But you have to understand that's just the prop firm business model. If you keep your payout smaller, you're more likely to be paid out. So my advice from prop firm owners, they've told me, is like if people keep their payouts under 5% of their account balance, typically they don't investigate it. So you should be fine most of the time. Most of the time. I'm not saying all the time. What about Top Step? Yeah, I plan to buy accounts with them. I just need to verify my KYC again because they got a new dashboard, but I plan to trade with them this week. That's coming. Where's my brother? Well, I don't live with my parents anymore, but he's probably at my parents' house or sleeping. He's probably asleep. He doesn't need to be awake. There's no German 40 market that's open, so he's not trading, so he's probably asleep. Hey, I'm dropping some gems. Where's the gems? Have I dropped something? Did I drop it? I might need to pick them up. You'll forget he's a human like us. He also experienced losses. Yeah, exactly. I take bare losses. You saw my FTMO history, right? All reds except for one. I take flipping losses, and that's just me being stupid. It's not me following my strategy. It's just me being stupid. But then you look at my funding pips account. Both phase 1 and phase 2, I passed in one trade on the first trade. Yeah, first trade I took in the account, I passed. On phase 2, first trade I took, I passed first on the first trade. Because I actually waited for the setup, you know? Like I actually got my confirmation, then I took the trade. But I do take stupid trades, I do take losses, and sometimes I wait for a good setup, it presents itself great, I take the trade and it still loses, and that's fine. It flipping happens, you know? You're going to take losses, it's just part of the game. What trading style do you think is sustainable? It completely depends on you. With my psychology, this trading style that I do, high risk to reward and German 40 and understanding market structure and liquidity, I might take a lot of losses maybe because of me being stupid, but it's sustainable for me because I understand my strategy very well. I understand why I'm entering, where I'm entering, what I'm targeting. And I know that the numbers work out in the long period of time. So this is sustainable for my psychology. A lot of you guys, you might not be able to take so many losses and just wait for that one winning trade. You might not have the psychology for that, and that's absolutely fine. You have to understand who you are as a person, what your psychology is, what your temperaments are, and you base your strategy off that. You have to work out the numbers if it works out for you. So it's very difficult to say what's sustainable for everyone because everyone's psychology is different. I trade this way because it suits my psychology. A lot of other people, they close trades very early using my strategy, and it doesn't work out for them in the long term in terms of profitability because they take so many losses, but the one trade that wins, they close it very early. So they don't even get to make back the losses plus the profit because they don't know how to take profit correctly. So it's very dependent on your understanding of the market and your psychology and the numbers, basically, the statistics behind it. So it's very difficult to answer that. But hopefully that makes sense in terms of like, it has to be suited to what you're comfortable with. V3 has genuinely helped me out. I'm assuming you're a V2 member because I've seen no one's purchased a V3 so far. So if you purchase the V2, you get the V3 for free. So I'm assuming you're a V2 member. Has genuinely helped me a lot. There you go, guys. It's helped him a lot. I put a lot of effort. It's over 4 hours of footage of me just flipping, explaining everything. So I don't know, if you're not getting a V3 crash course and you're trying to learn how to trade, you're missing out. I have a strategy that has 80% risk to reward. What does that mean? 80% risk to reward. I'm assuming you have 80% win rate, but I have lack of capital. But now I get a 10K free account from QT on your Discord channel, and I passed phase 1. Now I'm on phase 2. That's great. QT sponsors a lot of giveaways in my Discord. Like Alex just comes in and he's like, yeah, giveaway. Who wants accounts? Who wants accounts? So I'm glad you're in the Discord, and yeah, QT does give a lot of giveaway accounts. So I'm glad they're helping you. Have you traded with Breakthrough Capital? I just need your personal review. Well, if you see my payouts, yes, I have traded with Breakthrough Capital. I'm not trading with them right now, but they're okay. They're an okay firm. Use code ZAMCO to get like 30% off or something. But if you really want like the most reliable prop firm, go with Funding Pips. No lie, just go with Funding Pips. I tell you. Look at actually. Let me show you guys one thing. You haven't seen this. Hold on. Have a look at this. What's this? It's a Funding Pips like gift box that they gave me when I went to their office. It's got like a Funding Pips book, journal. Oops. Funding Pips hat, Funding Pips bottle, like a flask. Let me bring it a bit closer. I don't know if you can see that. So yeah. Now they just gave me this because oops. Okay, I'm back. Sorry. So they gifted me that, not because I'm an influencer or anything. I just went to their office and they gave me that. And the first gift that they gave me that you probably saw on video was because I got #1 on the leaderboards for April. So that's why they gave me a gift. So nothing to do with influencer crap. It's just they like to reward good traders. So yeah, Funding Pips, definitely. If you want to choose a prop firm, don't just go for the cheapest accounts, like the cheapest prop firm. Go with like a good one. And Funding Pips is like, their prices aren't crazy like FTMO or Funded Next, but it's like, it's in the middle. It's not cheap, it's not expensive, it's just in the middle, but they're extremely reliable. My most favorite prop firm so far. Passing them is the most easiest thing ever. I started trading 2 years ago from the last 5 months. But from the last 5 months now, I'm making my first consistent payout. So I want to ask you, what's the next step? Can I take a trade 10K accounts for now because I don't have? Well, it depends, innit? It depends how much have your payouts been, how much money do you have saved up, and you have to work out from that if you can afford to buy 10K accounts. I don't know. I can't answer that question for you because I don't know how much money you have. I don't know how consistent you are. You're saying you're consistent, but I don't know how consistent and how confident you are that you can make the money. So these are questions you have to ask yourself. You have to know your budget. You have to know your win rate. You have to know how consistent you are. You have to know how much you win. So in terms of how big your payouts are, you need to know all of these things for yourself. I can't answer that question for you. Do you trade differently with Top Step? Yeah, so with Top Step, to pass Top Step accounts, I just full port with 15 contracts, the 150K account, 5 accounts. I buy 5 accounts, 150Ks, and I put on 15 contracts on NASDAQ. And like the 1 minute candle would just go up like that, like just one or two 1 minute candles, and I make half the profit target, so 4.5K. And then the next day I just do the same thing. And it's very, very risky. I blow lots of accounts just because I'm just trying to get like 1 or 2 candles in my direction. And then for the next half, I do the same thing, and that's it. So within 24 hours, I'll pass the Top Step account. So that's what I do to pass. Now, when it comes to actually taking a trade on the funded account, what I do is I wait for a NASDAQ trade, because obviously I can't trade German 40 on Top Step. So I wait for NASDAQ. I wait for it to come in and give me like my confirmation, right? So I basically take the same type of trade. I wait for a sweep of liquidity, get my market structure shift, and then wait for a fair value gap. Once that's tapped into, I full port. Now, I know initially you can only risk like 3 or 5 contracts when you start off on the funded account. You can't use 15 straight away, but I don't really care about that. I just use the 3 or 5 contracts. I don't remember whatever the max contract is that I can do on NASDAQ straight away on the fresh funded accounts. I'll just like take the sell, and that's it. I just leave that trade until like we can hit like some sort of higher time frame target, like all the way down here. And if this is going to be like 10K per account, then that's 50K done just by taking the sell all the way down. That's what I do. So I pass very quickly by just full porting like 1 minute candles. randomly. Not really random, but like if I see like bullish candles and like I'll just try and take a buy over here and just try to catch this tiny 3 candles or whatever and try to pass like very quickly like that. It's very tiny scalps. But obviously I do blow a lot of accounts because of that, but they're very cheap, so it's fine. I can blow it. When traders make payouts, what would you advise? What have you done to sustain and invest money? What businesses can you advise for passive income? Now, for businesses for passive income, I haven't started that, so I would be stupid to be informing you about it because I haven't done it myself. So I can't tell you that right now. I'm thinking of doing like laundromats and car washes and all that stuff, but I haven't done it myself. So I can't tell you if it's a good business, if it actually gives you passive income or whatever. So until I do it, I'm not going to tell you, because then that's just wrong in it, because I haven't done it. I don't have the results for that. But when traders make payouts, what would you advise? What would you sustain and invest money? I haven't invested any money, by the way. I've not invested any of my money. It just goes back into buying more challenges. That's all I do. I make a payout. I use that payout to buy more challenges. I get payouts on them. I use that payout to buy more challenges. That's all I do. I'm just buying more and more challenges. That's pretty much it. I don't really invest right now. I need a bit more money. How does tax work when trading in the UK? Well, I have a limited company. I have a business bank account. All of my payouts go into my business bank account. And from that, I think I'll be paying like 20 or 22% corporate tax. But then I also pay myself dividends from that business account. So I pay myself like a somewhat of a salary. And I pay tax on the dividends. I don't know anything about the tax stuff because I haven't paid tax on my prop firm profits yet, because my company has to pay tax in 2026, not right now. So I've never had to really pay prop firm tax, the tax on my prop firm payouts yet. So when I do in April next year, then maybe I can tell you better on that. I haven't paid it yet, so I don't actually know the whole process. And more money and my maximum payout 1,000 and overall 3,000 payout. Now it feels unreal to me. Yeah, it's a very, very unreal feeling. I completely get you. When those numbers start hitting your bank account, you're just like, what the hell? This is real? And yeah, it is flipping real. It's crazy. Personally, I'm finding it hard to remove the stupidity from myself. If I can, then I guess I'll be profitable for real. Trust me, it's hard. Yes, absolutely, it's hard. I still make the dumb mistakes that I used to for the past 6 years. I still make those mistakes. I'm just very undisciplined, and it's so bad. And I understand it's very, very difficult because I'm in the same boat with you. I'm still very undisciplined. I still take impulsive trades. It's not something I've conquered. You just have to conquer your mind, and that's not an easy thing to do. It's very, very difficult, but that's what makes it great. When you surpass the difficult crap, oh my gosh, things are so much better. I haven't done it. I've done bits of it, and I can see already that it's so much better. So I understand it's very hard. How to get premium Discord access? You can't, because the spots are closed for the inner circle. I did say there's limited spots. The spots haven't all been filled up, by the way. There's still like spots remaining, but the thing is, that was my time window to accept clients and accept the people in the inner circle, of which they'll be receiving, well, I'll be announcing the winners of the giveaways. We do giveaways or prizes for the top 3 members every single month, worth £800 every month. So number 1 gets AirPod Maxes. So that's like £500 or £600 or whatever, £500 or something for AirPod Maxes, the headphones, the Apple ones, the big ones. So first prize gets that. Second prize gets some sort of Logitech RGB keyboard, and it's like £200. And third place gets like £100 Amazon gift card. So every single month, I'm giving these gifts or these prizes to the top 3 members of my inner circle. So that's just my way of thanking them for joining the inner circle and putting in the effort. But right now, spots are closed. When they do open, you'll find out on my Instagram and crap. Apologies. Inshallah, one day I'll meet you in person, face to face. Inshallah, that'd be great, man. Very interesting live. Thanks. Thank you. But when you go for the payout, if you raise 1% per trade, your profits is limited as well. Do you take a payout after a certain percentage? No, I'm not aiming for a certain percentage. I'm just waiting for a trade to work out. So if I took this trade right, let's say price hit my sell limit here and I take my sell, I would be targeting this low right here, because after this, there's no more price action for me, right? There's like fair value gaps to the left, sure, but I'm kind of just targeting like the major low, because it's like your first target. If we swept Asian highs and we're looking to sell, your first target is the Asian lows. So that's my first target, but right underneath we also have this low, so most likely that low will also get swept. So I will take my trade risking 1% from here, stop loss above, and I'd be risking it, like I'll be taking my take profit down there. So that's a 1 to 7 risk to reward. So if I'm risking 1% on a 300k account, that's $3,000. You times that by 7. So 1 to 7 risk to reward. 7, 14, 21. That's a 21k payout done. That's it. You're saying that only risking 1% is so little for a payout. No, it's not, because I have a lot of funding. Now, imagine I risk 1% across all of my prop firm funding. Right now, I have 500k. So imagine that 500k, 1% of that is 5k. 5 times 7, 35. So that's $35,000 made in one trade by risking 1% across my accounts. That's why it's a lot. I understand if you just have a 10k account and you're risking 1%, you might make like $700 on this trade. Maybe that's a lot to you, maybe it's not, but I get that it might not be a lot. But if you have a lot more funding, then the concept stays the same. You're risking 1%, but because you have more funding, it's worth way more. So that's why 1% is absolutely fine for me, because I can keep the funded accounts for longer. Alex QT still owes me a free account, still can't get on with him. Just keep on adding him here and there in the Discord. He might get back to you. He's a very busy guy. I've seen him, like I've met him bare times in person, and I know what he does day to day, like in terms of his schedule and what he's up to. He's flipping busy. Like I would not want to live like that. He's constantly occupied. So I understand why amongst like thousands of his clients, there's some people in the Discord that saying like they don't have accounts, whatever. And for him to go into it, look into that message and issue crap, like it is quite long, you know, like it takes up a lot of time, and I can understand why he might not do it, because he just doesn't get around to doing it. How much of your payouts are actually profit? I've probably spent over $100,000 on prop firm challenges, and I've made 680,000 in prop firm payouts. So over $500,000 in payouts is profit. So there you go. What would you trade a spread betting account like IG as it's tax free in the UK? What's IG? Do you mean IC markets? I don't know. But spread betting accounts, basically personal accounts. The issue with that is I'm just bad at trading them because I don't have the psychology or discipline for that. That's it. I know the strategy, but I just don't have the discipline. With prop firms, if I take a lot of losses, I just lose my challenge fee. I can just buy another account. But if I take losses consecutively on my fund, like my personal capital, I can't just buy another account. That's my money going down, down, down. Like I can't do anything about that. Have you traded with breakthrough capital? Yes, already said that. How do you handle over trading? Well, you just wait for your setups. If I'm waiting for the setup, I wait for the setup. If I don't get the setup, I don't take the trade and I just wait until the next day. I understand that I should get a trade in German 40 between 7 a.m. and 9 a.m. If I don't get my confirmations, if I don't get my trade, I just wait for the next day. That's it. You just have to be disciplined in terms of over trading. There's just no other way. You have to have a set criteria for your trades. If the criteria is met, you take the trade. If it's not met, you don't take the trade. That's it. As I know you're a Muslim, so if you don't mind, I have a question. What's your Islamic point of view on prop firms? Well, if I thought it was haram, I wouldn't be doing it. If I actually believed like, oh, this is absolutely haram, I shouldn't be doing this, I'm not going to do it, because the money I'm making from it, guess what? I'm eating with it. I'm feeding my family. I'm taking care of my wife and everything. If I believed it was haram, would I feed my family with the money I've earned from haram stuff? Like, no. So I don't believe that it is haram because you're trading simulated funds. If you want to talk about live accounts, sure, there's like a gray area, there's disputes or whatever. I understand that, fine. But when it comes to prop firms, you're not trading real money at all. There's no money in the live market. You're just buying an account. You're providing the company with your data by trading the demo account. And if they like your data and it's followed their criteria of rules, they pay you out a commission. So I don't see, I feel like prop firms are fine. Again, I'm not a scholar. I can't give you fatwa saying that this is haram or this is halal. I'm not saying anything. I'm saying my own belief. That doesn't mean it's correct. It could be haram. I don't know. I don't believe it is, but I'm not going to tell you to do something because I think no, it's absolutely fine. You should do it. I'm not saying that. So please don't quote me on it or do something because I've said it. Do your own research. Ask some sort of sheikh or mulana or whatever to look into it and give you a fatwa on it. I can't do that. For those struggling with discipline, try reading Trading in the Zone might help. Yeah, I've never read that book, but yeah, it might help you. I heard a lot of people, they talk about that book and apparently it helps them. So yeah, do that. How many trades do you take per trade? If you have one win, do you trade back to back on the same day? No. If I have one win and I don't have any, like, let's say I don't have any challenges. Let's say I have no challenge accounts. I just got my funded accounts. I have one win. That's it. I'm not going to take a trade anymore until I get payouts on those accounts. But if I'm waiting for payouts on those funded accounts, in the meantime, I'm going to buy more challenges and then I'm going to continue trading on that. But if on the day I've had a one win, on that day on the funded accounts, I'm not trading anything after that. Once I get one win, it's so much profit that I don't need to trade. So that's the way I go about it. My one wins are so big, I don't need to trade after it. But this is what I mean. If your trading strategy gives you like a 1-to-1 or a 1-to-2 risk to reward, and it presents itself like the setups a lot of the times throughout the day, then maybe you're going to take more trades. But my one trade is so big and it shows itself like once or twice in a day. If I get one big win, I'm not really going to get another entry because I already caught the big move. So that's it. That's me done for the day. Hi Zamko, just want to say thank you for the collab with QT, giving us opportunity to get free accounts. I'm currently up 2.6% on phase 1. May I ask if you could advise on us on how to scale up? It's a very easy thing. To scaling your accounts, for one, you have to get payouts. And then you have to, for one, you have to look at how big are those payouts. Now, if you have a really small payout, I'm sorry, you can't really scale. But if you make a good enough payout where you can buy more challenges, then do that. And then if you can pass them and get payouts on them, then you pull those payouts and then you buy bigger accounts. It's just numbers. I think you should be able to have like basic maths. I'm not trying to be rude or anything. I'm just saying like it's very basic maths in terms of knowing how much you've been paid out, knowing how consistent you are. Can you afford to buy more accounts? Yes or no? How big of those accounts can you buy? Like how big accounts? If you can buy 50K or 100K like numerous times because of the big payout, sure, do that. So it just depends on how big the payout is and how much you can afford and how much your bills are and all that crap. So you have to look at your own situation and understand the maths behind it. But yeah, it's just about buying more and more challenges and just passing them. For example, should we purchase a 10K account straight away after passing? No, not after passing. Don't do that. Just because you pass a phase 2 and you get to the funded stage, that doesn't mean you buy another challenge. Get a payout first and use that payout to buy another account. Don't just buy an account because you passed. You have to get a payout first, because then what if you don't get a payout, but you've also spent money on another challenge? Then you're just down a lot of money. And I mean, obviously, if you haven't made a payout, then you're going to have to buy another account anyways. But the thing is, you'd rather get a payout first, confirm that you have the money, and then do it. I don't want to be overzealous. I don't know what that means. And buying an account that's too large, but at the same time, don't want to be wasting time on a small account. Well, look, it starts off with a small account. My first ever payout was on a 10K account. Yeah, I made $2,000 on that 10K account, which was 20%. But that 2,000 allowed me to buy like, I don't know, it was like 6 or 7 50K accounts. I failed like a few of them, but I passed 2 of them and I got 10K payout in total between those 2 50K accounts. And then I used that 10K to buy 100K accounts and 200K accounts. So it just scales up like that. Like my payouts are really big. That's why I can quickly scale up. But if you have a low risk to reward strategy, then your payouts won't be that big. So it really depends on the amount of your payouts. I can't answer that for you. I'm on phase 2 QT3 account, but my issue is they don't allow me to risk 1% because my stop loss is always about 5 to 10 pips. Well, if it's 5 to 10 pips, just use a higher lot size. Unless your lot size restricted, then it's a bit peak. But if you have a tighter stop loss, then just use a bigger lot size. That's what I do. But I understand that you might be restricted to a certain margin or lot limit. Then there's not much you can do about that. You just have to take more wins until you pass. I have a very important question for you. Why everyone getting profitable with only liquidity sweeps? I never see any other trader make money so much other than liquidity sweeps in NY on NASDAQ. Because I'm going to tell you this. What is a liquidity sweep? Why is it important? You have to understand banks and institutions, these big people, the big whales in the market, they can't just press buy and just buy an amount of like a huge amount. It's the same way with crypto, right? If you've traded crypto meme coins, you know that if the liquidity is very low, you can't sell a big position, right? If you have like $1,000 in profit on that crypto coin and there's like very little liquidity, you can't really press sell. You keep pressing sell, but it will just say you don't have, there's not enough liquidity because there's not much liquidity in the market. There's not enough money in the market for you to be in that trade. So you have to understand it this way. If institutions are trying to sell over here and there's not enough liquidity in the market, they need people to sell their positions and close their positions in a loss, which puts money in the market. And then these institutions buy that trade off them, because to sell your position, someone has to buy it off you. That's how buying and selling works in the market. When you place a buy in the market, someone is selling you that position. They're selling their position to you. And when you're selling your position, someone is buying it off you. You can't sell your position if no one is willing to buy your position off you at that price. So the reason why meme coins go up and up and up is because people are buying into it. But if no one puts money in the market, that market just doesn't go up. And if you sell, it only goes down. So people have to buy your sell off them. So if price goes up from this candle here, that means the person that bought here, or the people that bought here, they were happy at that price to buy at that price. But if no one wants to buy at this price, then it's very hard to sell there, because to sell your position, someone has to buy it. So because they can't just sell their position or enter a short position, they have to push price up so that all of these people, their stop losses are hit and they're panicking and pressing sell. And then when they're pressing sell, that's liquidity in the market coming. And those whales that push price up, now they're buying those orders off those people that are trying to sell. Now they have the liquidity to press sell. And then you get the real big moves. So that's why you have to wait for liquidity sweeps. And that's why the market moves. So when you see a liquidity sweep, that's where you see the actual big move happen, because now the institutions can enter the position and actually move the market where it wants to go. So when you understand where these liquidity sweeps happen and why, and you enter based off that, you catch the big moves. And that's why I catch the big moves that I do. I understand where the manipulation is. I understand where the liquidity sweep is. And that's why I catch the big moves. You've seen my payouts. You've seen the charts. Like, I catch the big moves because I see the liquidity sweeps, okay? Hopefully this helps you understand why liquidity sweeps are very profitable. You just have to understand what actually is a liquidity sweep, where institutions get in and get out, and then you can catch the big moves. Hopefully that was a very good lesson to you guys about liquidity. Yeah, I spoke a lot there. Sorry. Hopefully, does that answer everyone's questions? I'll be leaving so sad didn't get to end it off the stream. We're basically going to end the stream now. I'm just going to get through these last few questions. Advice on how to trade 50k funded ticks account? I don't know. I haven't traded with funding ticks. I don't know. I don't even know their rules. I don't know. It's hard to answer that. Assalamu alaikum, my mentor. Walaikum salam. My account on QT challenge roaming 3%. How I controlled to see I scaled it back to break even. I don't know, man. It just depends on your strategy. I don't like when people ask me, I'm in drawdown, what should I do? I don't know how you trade. I don't know what your risk is. I don't know what your risk to reward is. I don't know what your win rate is. I don't know what your consistency is. I don't know what your strategy is. I can't answer that question for you. It's very, very difficult. If you're trading my strategy, it's a completely different answer. If you're trading a 1 to 2 risk to reward, it's a completely different answer. I don't know. Also, how much money do you have in the bank? Can you afford to lose the account? Can you afford to purchase another account? I don't know these factors. I can't answer that question for you. What is your advice regarding chasing a trade? Let's say you missed the entry on your current setup. Will you enter on the way? Yes and no. So let's say we did tap into this fair value gap and then we push down. Now, if we then retrace up into this bearish move, and then we retrace up and then there's a fair value gap over here, then I might enter a sell there if I missed this initial one. So yes, if we get a retracement into a valid fair value gap in a premium or discount after we've moved away, and then now we're getting another retracement, then I might enter the market again if I missed the initial one. Do you enter multiple trades at the same time on a different pair? No. When I'm in like German 40 on my accounts, that's it. I don't really start looking at another pair to enter on or whatever. I don't do that because then it's a different psychology. I'm having to worry about another pair and where that's going. It's like I kind of just focus on one. So I don't really enter other pairs. Funding pips, just don't open the same trades as someone with a different account on the same IP. You'll get banned forever. Yeah, obviously if your trade is very similar to other people, then yes, you will get flagged up. I've been flagged up before, but then I proved that, look, it's my trade. What are you doing? And then they unbanned me, and that was fine. Okay, so you'll be leaving. Why is the German chart paused and also took the same sell on Thursday? Okay, I don't think you should be trading if you're asking why the German indice chart is paused on a Sunday morning. You shouldn't be trading. What trade copy do you recommend since you are very good at trading multiple accounts? I use social. They used to have MT5, but they stopped giving MT5 access, so I can't really use it anymore. So I use this thing called Social Trader Tools. That's what I use. I've been streaming for 1 hour 48 minutes now. I've answered a lot of questions, and hopefully, I think the best part about this stream was the liquidity explanation. I see a lot of people like that. Hopefully that explained a lot to you, and hopefully I've answered everyone's questions. I think I have. I don't think I've skipped a question at all. So thank you again for joining so early. I know it was 7 a.m. I'm sorry, but it's good that you're waking up early if you had to wake up early or if you didn't sleep or whatever. So thank you for tuning in. I'm going to be ending the stream here. I've got stuff to do, but again, thank you. So yeah, what trader? Let me just type it. Social Trader Tools. What were the tasks you mentioned on Discord? Oh, yeah. Sorry, I haven't mentioned this to everyone. Basically, you guys can all earn money, right? This is only for people on stream. I'm not going to be posting this on my Instagram or whatever. But basically, I've got an opportunity for you guys to make money. My V3 crash course is worth £500, okay, approximately. I need people, okay? I need you to DM me if you're willing to do this. If you are willing to create a fan page of me, post clips of me on that fan page, if you do that and you link the V3 crash course for sale, like in your bio, I'll give you a coupon code like to get 10% off, right? That so like people would have, like if people want to buy the V3, they would be incentivized to use your code rather than just coming to my main page, because I'm not going to give them discounts. But if they use your code from your fan page, then they'll get 10% discount, right? So you have to create a fan page of me, post clips of me, and on any sales that you make, you'll get approximately 100 or 90 pounds or 100 pounds for every sale you make. That's a lot of money. For every sale you make, you get 100 pounds approximately. That's my affiliate marketing for you. Create a fan page of me, promote my V3 crash course. So basically a fan page of me. And if they use your code, you get 100 pounds sent to you for every sale that you make. It's all on WAP. I don't have to track it. It's automatic. Like you'll have your own WAP affiliate dashboard and stuff. So it automatically tracks your sales. So yeah, you'll be paid 100 pounds per sale. Just make a fan page of me. Would you send clips? So basically for clips, use all of the podcasts that I have, but I need anyone who's actually willing to create this fan page and actually post clips of me and actually do the edits. You have to DM me, because then I'll set you up with your own code, and I'll give you a list of all of the links to every podcast that I've been on that you can clip and make clips out of it. And my advice to everyone is not to use any music or any women in the videos, because I don't post that. So yeah, on Instagram or Facebook, it's up to you, wherever you want to promote me. If you want to do Instagram, TikTok, and Facebook, I don't care, wherever you want. If you feel like you can make more sales if you have multiple pages, then great, you do that. It's up to you. However much work you want to put in, obviously the more views you get and the more sales you get, the more money you make. But yeah, this is a lot of money I'm giving away. So for every sale you make, that's 100 pounds to you. That's crazy. Make 10 sales, that's 1,000 pounds you've just made by just clipping podcasts of me. Very basic, like just chop it up and post it with like captions or whatever. And if you make sales, you get commissions. So it's a lot of money potentially to be made. So this is my kind of way of giving back. And obviously it's a win-win situation. You give me exposure, you get paid. So yeah, we're trying to help each other out here. So that's why I'm only saying this on stream. I'm not saying this on my Instagram or anything. I might make a Discord like chat for people who want to do this, but I'm not making this like public information. I only want like specific people to do this for me. And yeah, you'll be paid very nicely. So yeah, that's my tasks that I had for people and my way of making money for you guys. So yeah, that's everything from me. Thank you everyone for joining. Daddy Kira, I'll do that. Thank you. Just DM me on Discord. DM me on Discord saying that you want, just DM me saying fan page, and then I'll know that you want to do it. DM me on Instagram or Discord or whatever, and I'll just look at that. Just say fan page and I'll start talking to you. So yeah, so thank you everyone for joining. I'm going to go now. Hope you benefited from this session. Thank you. I will see you guys later. I'll be in the Discord. Where should I DM you? I said Instagram or Discord. Just DM me in any of that. So thank you, everyone. Take care. And I'll see you guys later. And inshallah, we'll see if we can make a lot of money in September. So take care. Bye. What's your Discord? Go onto my Instagram profile, Zamco Capital. And in the bio, where the links are, you'll see my Discord link. Or go to my Twitter page, Zamco Capital, and the pinned post will be my Discord link. So just join through that. So everyone take care. Bye. Actually, wait, hold on. You're asking for a Discord link. Let me just send it to you in the chat. Why am I being so stupid? Invite people. Copy. Actually, wait a minute. Let me make that. Never. Okay, here we go. Copy. There you go, buddy. There's my Discord link. So you can join there. I don't know why I'm making it so difficult for you guys. There it is in the chat. So yeah, there we go. Thank you, everyone, and take care. I'll see you guys later. Peace. You learned so much, deal. Thank you. You're welcome, man. All right, bye.